Hello everyone, today I'm going to be going over private equity and kind of what it means and entails. So the simplest way to define private equity is they are investment funds that invest in private companies. So that's typically what you would hear when people refer to private equity. So basically accredited investors or institutional investors, so investors with a lot of capital will invest in a private equity fund, and then the fund managers invest that money into the private companies and hopefully get profit from owning those private companies. So to become an accredited investor, it does take a lot of capital. So the average person most likely would not be able to just go ahead and invest $1,000 or $2,000 into a private equity company. You would need a lot more money than that to do something like that. So usually it is for institutional investors or accredited investors, which are investors with quite a bit of capital. So the whole point of private equity is to target private companies that have a lot of potential, but they don't have the capital they need for expansion. So that's where private equities come in. They see that this small private company has a lot of potential to grow the business. They don't have a lot of funds. So this private equity company will go and acquire most of the private shares of this company or take over the full company. Sometimes it's 100%, so it's wholly owned at that point. But they'll take over that company and then basically fund it to what it needs to operate at its maximum capacity to do really well. And then maybe a few years down the road, they'll sell that company when it is worth a lot more because they pumped in a lot more money into this company, and they grew the business. And then years down the road, they'll sell the business at a big profit, and then the fund investors get paid out that profit. So that's basically how a private equity company works. And then, yeah, at the end of the cycle, they'll do this with a lot of companies, and they'll just keep buying companies, kind of operating them as efficiently as they can. And then down the road, they'll sell these companies, and they do this with a lot of different companies at the same time. So yeah, private equity firms do manage quite a few millions of dollars most of the time, and it does take a lot of effort on their part, and they do get paid from management fees as well as selling from the profits of the sales of the private companies. So yeah, just wanted to go over private equity as a whole, and I hope you guys enjoyed.